This is your LMAX exchange technical update for Wednesday, July 19th, 2017. Eurodollar. So the euro is finally pushed up to fresh 2017 highs, taking it through 115 and into this critical longer-term resistance zone between 115 and 117 that's defined going back to 2015. And so with the market pushing up in 2017 and the trend looking a little bit extended, there is risk now that the market will find some form of resistance into this 115 to 117 area in favor of a bearish reversal in the sessions ahead. At a minimum, though, we would need to see a break back below the previous weekly low, which comes in around 113.70, to confirm this or strengthen this outlook and accelerate declines. Ultimately, a break above 117.10, that 2015 high, would be required to force a shift in the structure, a longer-term shift in the structure, and suggest that this market is putting in a more meaningful base. Sterling dollar. So cable has extended its run of 2017 highs, trading up to 31.26 at this point, ahead of the latest minor setbacks. But it is worth noting that the price action in Tuesday trade set up a bearish outside day formation, which could set the stage for a move back to the downside in the sessions ahead. Ultimately, the outlook here is highly constructive as the market has recently pushed up this year in April above 127.75, a previous range high that had defined the market top after putting in a plus 30-year low back in October of 2016. And the breakout now suggests that the market could be poised for an eventual move up towards 135. But overall, we could still see some choppy consolidation roughly between 125 and 130 before the market decides to make that final push or that next push up towards 135. Look out for this bearish outside day formation on Tuesday to open the door for some setbacks into Wednesday trade. Dollar yen. So dollar yen has recently stalled out into a familiar area after the market over the past several weeks has stalled out on rallies above 114 and above 115 if we look back a little bit further back into March. But overall, this is a market that's chopping around, and so this latest topside failure above 114 sets the stage for a resumption of declines back down towards range lows around the 2017 low just ahead of 108, only back above the recent highs that we'd seen, back above that high that we'd seen several days back or a few sessions back around 114.50 would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss has been comfortable consolidating over the past few sessions, but the recent breakout here above 110 is an important breakout as it opens the door for an extension up towards a critical 2016 high, which comes in at 112. At this point, we need to see a break back below the previous weekly low around 109.80 at a minimum to take the immediate pressure off the top side. Aussie dollar. So Aussie has seen a big move over the past few sessions, with the market now breaking out to fresh 2017 and multi-month highs beyond some important resistance in the 78 and 79 area. It's a question now whether this market is going to put in a major base here on a longer term basis, and if this opens the door for an extension up towards next key resistance, which comes in the form of highs that we saw going back to 2015 around the 81.60 area. It would take now a breakdown back below the low that we've seen this week, which comes in around 77.85 to take the immediate pressure off the top side. Dollar CAD. So dollar CAD has extended its impressive decline since putting in a 2017 high all the way up just shy of 138 back in May. At this point, though, we've seen a breakdown that's extended well beyond 10 figures, leaving daily studies quite overextended. Still, we do have a 2016 low, which is in sight now at 24.61. But again, it's worth noting that these daily studies are extended. This is the weekly chart, and we could find some support. If we do see a break to the top side at a minimum right now, we need to see a break back above the current weekly high, which comes in at 27.01 to take the immediate pressure off the downside. Kiwi dollar. So the New Zealand dollar is back up to testing those 2017 highs that were seen earlier this year in the month of February at 73.76. It will be interesting to see how the market responds up here if we consider a very impressive move already over the past several weeks off the 2017 low that was seen in May down at 68.18. There is a lot of meaningful medium to longer term resistance up towards 75, and so despite these latest gains, we could soon see some form of a bearish reversal, opening the door for pressure back on the downside. But we would need to see a break below 72 now to strengthen this outlook and accelerate those declines. SPX 500. The S&P 500 continues to be very well supported on dips, continuing to extend its record run, and the door is now open for a test of a measured move extension, which comes in at 2480. This follows an 80-point consolidation seen earlier this year between 2400 and 2320, and so the breakout above 2400 opens this move up towards 2480 in the sessions ahead. Right now, we need to see a break back below 2400 at a minimum to alleviate immediate topside pressures. Gold. So gold had seen some intense setbacks in recent days, but the market has been very well supported once again on dips, as it's been over the past several months, with the most recent round of setbacks supported ahead of 1200. The break that we saw the other day back above 1230 puts the pressure back on the top side and opens the door for a potential resumption of gains in this market back towards that 2016-17 peak that we had seen on the 6th of June, which comes in just shy of 1300 at 1296. Only back below 1200 would compromise the constructive outlook for gold.